Hello, this is Mitam Television, an American stock investment channel, simultaneously broadcast with Mijihun Television and Jehu. Last time we analyzed two companies together, and based on the data we looked at which one seemed better. We'll try to compare them again today. The second company is Arista Networks. To put it simply, it's a company that makes things like high-speed data transmission ports, switches, and Ethernet devices. The main reason this company is important is because as artificial intelligence develops and more artificial intelligence data centers are built, the amount of data that needs to be processed increases dramatically. In the past, there were just high-speed data centers, but now there are artificial intelligence data centers, and all the new things being made are like that. So, to handle these large amounts of data quickly and smoothly without any bottlenecks or delays, you need equipment that can process everything efficiently. The company that makes this equipment is Arista Networks. When investing in artificial intelligence-related industries, consider not only artificial intelligence and semiconductor companies, but also those producing related equipment. Understanding this perspective can be beneficial. If you look at NVIDIA's stock price chart, you'll see that the stock price has risen the most compared to others. When a company receives a stock price adjustment, sometimes it drops, but now it's coming back up. There are companies that have been falling for about 60 months, and even during the 90-month period, they are now in the process of rebounding to the middle. The key point now is if it can rise further. Ultimately, the real results will matter. So in this corner, instead of just recommending stocks, I want to show you how to look at things from 3 different perspectives and how to analyze them based on data. First, we look at whether it's a promising industry and what the expected and actual earnings are. Second, we check the company's vision. Third, we analyze the timing and trends. We use these 3 perspectives to review the data and provide our analysis. The first question is whether it's a solid company. So as you can see, it ranks in the top 0.48% among all American companies, which makes it a top-tier stock. So there's no need to analyze the company any further. But the only downside, as you can see here, is that its growth score is only 40 points. Compared to other industries or American companies, the mid-range score is acceptable, but still lower than 80 points. Oh, I'll explain the reason for that in a moment. That's why the overall score is quite high, even with these kinds of factors. These are just 2 of the key points of this industry, but I'll move on. Usually when I analyze the fishing industry or classify sectors, I don't really go into this kind of story. The reason is that industries with a lot of stories usually have a lot of articles, and since there are also many YouTube channels covering these stories, I mainly focus on content based on data and try to keep it simple. So since Arista Network is a business that's hard to classify, I'm just trying to briefly mention that part. As I mentioned earlier, in data centers, it's important to process data quickly, so equipment that can handle data at high speeds is necessary. This is a key indicator that shows the competitiveness in that market. High-speed data center switch. If you look at the market share, you can see that this is a market where Cisco and Broadcom are competing. But when you look at the market share, Arista Networks is quickly catching up, and now Arista Networks has overtaken Cisco in the market above 10 gigabytes. This is the situation where Arista Networks has surpassed Cisco in market share in this segment. Looking at port numbers and related share, Arista Networks is growing rapidly with a 43% share, making it a leader in this market. Arista Networks stands out significantly in this industry. Next, this chart is also important. Earlier I mentioned above 10 gigabytes, but here the figures are for 20 gigabytes, 100 gigabytes, 200 gigabytes, 400 gigabytes, and 800 gigabytes. Artificial intelligence big data centers handle data in the range of 200 gigabytes, 400 gigabytes, and 800 gigabytes. This market is very important. And since this market will take up most of the share, it's important to know how these transmission rates will change. So currently, we're looking ahead to 2025. But as we get closer, the more important it becomes to handle data for 440.925 pounds, 442 pounds, and 884,671 pounds, and to secure equipment and companies that process and lead this data. That's what we need to know. So in the case of Arista Networks, for example, it's a company that's growing very rapidly in this market. And I think it's one of the companies we should keep an eye on as a major player in this growth. First, I'll explain the data fundamentally, so everyone can understand it immediately. Without any particular ups and downs, the company just kept growing steadily in a straight line, regardless of the market's ups and downs. It grew so consistently that you could say it was a company that developed without any major fluctuations. Operating profit grew by an impressive 42%, indicating a very solid company, apart from the temporary decline during the coronavirus disease 2019 pandemic. Overall, it's a good company. In the case of companies like Seibionji that make this kind of equipment, their assets tend to be concentrated in inventory and fixed assets. Inventory turnover days measure the time from raw material purchase to finished product sale. Accounts receivable turnover days measure the time from sale to payment receipt. These ratios are crucial for companies with significant inventory. So, the lower the simple numerical value, the better. Rather than just looking at the number itself, it's important to compare it to the past to see if it's getting higher or lower, and to make your judgment based on that. So, for these parts, if you look at various financial statements, or if you study the corners that are frequently covered on financial YouTube channels like Mijuchuna or Johui Mitem Television, you'll be able to understand these financial indicators more easily. It's best to compare the turnover of inventory assets to past values rather than only considering the absolute value. First, understand the demand. Also note the significant changes in the inventory turnover days. When things are like this, it means that when the industry is booming, this number will naturally go down, which means the actual performance is very good, the cash flow is good, and the collection is good as well. On the other hand, when the inventory turnover days increase, it means that the speed of sales is slowing down. Recently, if you look again from 2023 onwards, you can see that it is starting to rise again on a yearly basis. The company's cash flow is improving and being managed effectively, which is a positive indicator. So these are things you should check on a quarterly basis, and that's why these companies will be better off if you keep checking their financial statements. When these charts first start coming in, many people, not just premium members, but even our regular members can all see them. Premium members, in addition, can see things like the buy, sell signals, and even the recommendations. If you look at the current profit and loss statement, it's in a deficit. If you look at the cash flow from operating activities, it's a blue chart, and this is shown as a complete straight line, with each angle at exactly 45 degrees, indicating that it's steadily increasing. When operating cash flows exceed investment and financing activities, it's a very positive sign, making the cash flow statement look favorable. And if you look at this company, you can see that investment activities are being carried out like this. Investment activities are mostly things that the company needs to grow. Investment activities often involve setting up servers for data storage or building factories for production. Managing significant cash through these activities ensures no issues with cash flow statements. Carefully examine the cash flow from financing activities to identify any mismanaged areas or unusual structures. Pay close attention to these details. Next, let's look at the expected actual performance. If you look at this company and its stock price, you'll see that there hasn't been much change since 2023, and at the end of 2024, the company is expected to turn a profit for the first time, according to the guidance they've received. Other than that, the stock price has been steadily rising, and if you look at the earnings per share, you can see that the earnings per share is also expected to continue to rise steadily in the future. It's an industry that's growing quite rapidly, so you can see that, and that's why the stock price has been rising like this without much fluctuation. So if you look at the stock price and the earnings per share chart, you can see that overall there haven't been any major fluctuations. The stock price follows the earnings per share, so in the future, depending on whether the earnings per share growth rate increases or decreases, the stock price will also change accordingly. The current stock price trend is moving sideways, but it will eventually follow the dotted line in the future. Regardless of the time it takes, the price will return to the mean, and the valuation will be adjusted accordingly. I'll show you the actual numbers. The manufacturing sector has a faster growth rate, with sales growth rates of 19%, 18% and 18%. Next, the earnings per share growth rate is 9% this year, and then 17% and 22% over the next 2 years. So if this growth rate continues as expected until 2025, the stock price is unlikely to fall. The company's rapid growth and surging stock price are the reasons behind it. But in 2024, the reason the stock price dropped a lot until April and May this year is partly due to earnings adjustments. But the main reason for the big drop compared to the earnings adjustment is actual 2025 earnings are expected to decline. Now people are looking at earnings for both 2025 and 2026 when making investment decisions. The market is likely to focus on data for both years. So the average annual sales growth is about 18%, and the earnings per share growth rate is expected to be 17% next year, which means the market sentiment is likely to improve further based on the point that things are getting better. And in the following year, it's expected to be 22%, so it should get even better. The growth rate was around 40% before and will likely recover. So, whether it's a consensus provided by market sentiment or investment opinions provided by analysts' reports, it's likely that these perspectives will become more favorable in the future as the potential for improvement increases. If you look at the valuation, the part that's colored dark is the high valuation, and the part that's colored light is the low valuation. So it started at a low valuation when it first entered the market. This is an opportune time to invest in stocks. Although previously undervalued, the recent uptick suggests a potential rebound. Even materials have room for further growth. If you don't recognize a market shift, you might buy at a higher price or sell at the wrong time. If the price is fair, wait for the right opportunity to buy. That's the best approach. It was undervalued before, and now the price is fluctuating between the lower and higher ends, reflecting the current trend. So, I'll move to the service site and show you the current status of the Arista network in real time, and I'll try to wrap up by showing you these things one by one. It's currently at $95 and hasn't reached $100 yet. Maisu Shinho is currently Boyu Shinho. That means Maisu Shinho has already been sold. So if you look at it, it came out at $87 on May 9th, and it seems to have come out about 2 weeks before the low point. So right now it's up about 9.6%. The company's operating profit margin is around 97%, which is exceptionally rare. There are some exceptions in the middle, but overall, if you catch the timing right once, it tends to keep matching well. So when you look at this data, the fact that the cumulative profit is high means that this pattern is being well maintained, and you can know this. So I think it would be good for many people to refer to these as well. So if you look at it this way over the past 6 months, even when the price went up, it didn't go up the next day. And even when it fell, it didn't fall further. Even when it was undervalued, it didn't rise. And sometimes even when it was undervalued, it could fall even more. That's why these things happen. Even if earnings are confirmed to have improved, the price on announcement day may already reflect that. So currently, it's just holding steady. This is the same for stock diagnosis indicators, and when you look at smart scores or exponential moving average charts, the 5-day, 60-day and 20-day lines all showed similar patterns here. When you look at the midterm signals, the same thing happened around May 16th, which was a typical midterm signal. The 121-day line at 90 units is acting as resistance, and with the 95 units, if it holds, there's a high chance that both the 121-day and 61-day lines could be surpassed. At this point, it's a situation where only those who bought at the highest point are coming out with losses. The trend appears to change in roughly 3 months when observed closely. Other than that, if you look at this kind of data or these things here, it seems like a good sign. Also, when you want to improve growth or develop these things, it would be good to use the recipes listed here. If you use these recipes, you can develop growth factors more quickly like this. Many of you shared stock preferences earlier. Instead of just recommending stocks now, pay attention to new signals, upcoming stocks, valuations, and earnings trends. The latest artificial intelligence-based signals can be a helpful reference, but don't rely on them heavily. That's all for this section. So, even if the situation looks good, if the valuation is already high, I personally don't want to buy it. When you look for companies you want to invest in, it's good to keep this in mind and continue watching them in that way. I think buying when supply and demand are favorable is a good idea. You can make decisions and buy independently, even without Meimei Shinho. Meimei Shinho isn't always 100% correct. Currently, Zhonghee is providing this data system and further developing the Meimei signal for you. So if you study these parts, I think it will be of great help to you. If you liked the video, please subscribe, like, and leave a supportive comment. Thanks.